Okay, welcome to this week's market update. My name is Alejandro Zambrano and I am a market analyst here with ThinkMarkets. And we will, as always, as we do at this time of the day and time of the week, take a look at what's happening in the markets. But before we start, as always, I need to stress that financial markets, unfortunately, is high risk and we might lose all of our invested money. So please bear that in mind. Okay, good. So last week was very interesting. Gold prices reached a fresh all-time high. You might remember we said that we were stuck in this rectangle pattern. You can also call it an ascending triangle pattern. And we had that breakout and went straight up. As for Euro USD, the market was a bit trickier, and we mentioned that as well, but the market sort of stabilized. And the move that caused the Euro USD to go up is also the same move that caused gold prices to go up. So that's what we're going to talk about. So let's address first what happened last week before we jump into the details to what's going to happen this week, and then we'll look at the charts. The whole presentation will take about 10 minutes. And if you have any questions, just pop them in the chat. The team is ready here. They're going to send me all your questions. So it doesn't matter if you're watching this on YouTube or Facebook, we'll be able to address your questions before the end of the presentation. Okay, good. All right, so let's talk a bit about what happened last week. So we had UK unemployment numbers dropped to 4.1% from 4.2, and it was as expected. Also, claimant count change, which is a figure that shows how many people lost their jobs, was slower than expected. So with this data, we know that the UK labor market is doing slightly better than expected. And this is something that's going to play a role because this week we have the Bank of England rate meeting, and obviously with the labor market doing okay, there's less of a hurry for them to cut interest rates. Because remember what happened in the US, initial jobless claims deteriorated for many weeks in a row, and the unemployment rate started to deteriorate. That is when the Fed made that big change and said that they were ready to cut interest rates. So with this data, there's less risk of that happening in the UK right now, which again is the reason why we see GBP USD pushing to the upside. We also had some UK consumer price figures, and they were the headline figure, which is the number that shows all of inflation, met expectations. However, core inflation, which looks like at core items that people consume, that doesn't include, for example, energy prices, even though we all sort of consume energy in one form or another, show that core inflation was increasing. Okay, that's not really good because that could delay rate cuts. However, bear in mind that the Federal Reserve has told us that what they focus on right now is the labor market. But what happened is that the S&P 500 was on its way down on that data, but then because of NVIDIA presentation at Goldman Sachs, where they said that there was higher demand for their chips, that pushed NVIDIA up with about 8%, and that caused the S&P 500 to push higher. So those AI stocks that you can trade with ThinkMarkets is pulling the whole S&P 500 upwards again. And we have a very interesting chart that we'll show in a couple of minutes. But yeah, on its own, it's not great that inflation is, especially core inflation, is a bit stronger. Now, if you look at the yearly increase, it was 2.5%, okay? So that's not too high, right? Imagine, or remember, interest rates in the US are around 5.5%. So it doesn't make sense to have interest rates at 5.5% when inflation is at 2.5%, right? And that's why people are selling dollars, buying gold, because they think rates are going to come down. As for rate cuts, the European Central Bank did cut rates last week, and you would say, well, they cut rates, why is the Euro USD upwards? Well, because the labor market in Europe is at the best levels we've seen since 1995 or so, okay? And according to the ECB, wage growth is too strong in the euro area. So salaries are increasing with 4.4% in the euro area, and this means that they're not ready to cut rates aggressively. They're not ready to tell people that they're going to cut at each rate meeting. And that is why we saw the euro trade to the upside. Because if you look at what's happening with the Federal Reserve, then they're very ready to be like, oh, we are going to cut rates, you know, and we're going to get the economy going, whatnot. Here, they're much more relaxed and be like, okay, you know, all right, inflation is coming down, but wage growth is too high, so we might have secondary effects. And that's why the Euro USD is pushing to the upside. Now, just to round up last week's news, this is quite interesting. So jobless claims remain steady at 230,000 new people that lost jobs. It's been around these levels for quite some time. This is weekly data, and what's quite interesting is that the data was really, really bad for many weeks, and that's why we got that fear in the market. But if you look, I think in the last 5 weeks, they've been stable now. So when we look at this, it makes sense. Like this is Euro USD, okay? Euro USD pushed to the upside, but in the very short term, we're sort of still trading within that wedge. If we trade above 1.1124, we'll probably leave this little bear channel and could potentially push the upside here to reach 112 and 113. If this doesn't work out, then buying down here between 109.50 and 108.96 will become interesting. The reason why this is so interesting is that this is strong resistance that was limiting the price to go up. So we know resistance turns into support. What's also interesting is that this is on its own. This is an ascending triangle pattern. And you might remember that we mentioned this and we said that if we break here, we can go much higher. So we're just having a retest of the breakout point. That's it. Here are gold prices, which moved to the upside on the ECB being rather hawkish. And we said a break to 2,529 would take us up to 2,586. That was reached. Looking at this today, we can have a correction, maybe down to 2,559, maybe 2,541. But from these levels, I think we're going to go up again and push higher. And if we would, for some reason, trade all the way down to the breakout point, then again, it's a bit like with the Euro USD. It's a very good reason to be bullish from the breakout point. Now, this is a very interesting trade. This is crude oil prices. I'm not showing to you here. I think you can find it on thinkmarkets.com. And you have a big wedge pattern, which says we can go down with almost $18 per barrel. This plays in the hand of the idea that we're going to have a big US economic slowdown, okay? And it says that as long as trade below 74.88, we can go down to 68.70 and 65.13. And here's the dollar yen, which traded below 114.17. I prepared these charts on the weekend. And I would say as long as we trade below Friday's high, we can go to 137.32 and 133.79. And we're going to finish with the last chart, and then we're going to look at what's going to happen in the new week, the economic calendar. And here you have the S&P 500, which is stuck in a wedge pattern. We see them everywhere now. And here the market tells us that if we break 5,659, then we can gain with about 6% and reach 5,991. So let's take a look what's going to happen this week. Okay, so you have retail sales. You say US retail sales on Tuesday at 1:30 p.m. London time. At the same time, you have Canadian Consumer Price Index. People say that the retail sales will unlikely have a big influence on the Fed rate meeting that happens the day afterwards on Wednesday, as you can see on my list. But it can still create a bit of volatility. You have different trade ideas. If retail sales is strong and Canadian consumer prices is weak, you can potentially anticipate dollar CAD to shoot to the upside. Whereas if Canadian inflation is strong and US retail sales this week, then dollar CAD can come to the downside. So you have a couple of plays there that you can work with. Also, retail sales on its own, imagine, is really strong. Like the last reading was 1%, but before that, I think it was by 8.8% or 9.9%. So if you have like a very strong retail sales number, then obviously gold is going to move back towards the buy areas. So that's something as well to pay attention to. On Wednesday, we have consumer price index. So if you are trading things like GBP USD and GBP yen, you want to keep an eye on that. And then you have the Fed rate meeting, where they will most likely cut from 5.5% to 5.25%. Now this is interesting. Typically, by the time they cut the first time, the US economy is already in a recession or will be in a recession just a few months later, which makes it really interesting because it definitely supports gold up and definitely supports the idea that oil is going to come down. That's why those two markets are my favorite markets for this week. Now, it does not support the S&P 500 breaking bullish, and it definitely does not support crypto prices. So let's see how this plays out. But if history repeats itself, we'll have a short recession that will last maybe 9 months or so, and we'll see that relatively soon, I would argue, maybe then on from payrolls over the next 3 to 4 months. On Thursday, we have Aussie unemployment figures if you want to trade the Aussie dollar. And then we have on Thursday the Bank of England rate meeting, where people think they're going to leave rates unchanged, given that the labor market was quite strong. I don't think they will be too dovish. So there's a high chance that they're going to be a bit like we had with the ECB. So they're going to lean back a bit and say, okay, you know what, inflation has come down, but the labor market remains quite strong. But the case is weaker there. So there's a chance that they might say in 3-4 months we're going to cut rates. But overall, I think less dovish than anticipated. And that's it. That's what we have to work with for this week. Let's check with the team now. If you don't have any questions, it's all good. You can always just drop them in the comment section, and then we're gonna follow up with you guys during the day. If you don't know me, I've been trading since 2006. I'm a profitable trader since many, many years. And yeah, if you have any questions, this is the right time to ask. So the team is telling me we have one question. So let's see what that question is all about. What can you do if you want to keep on watching this live and ask questions live? Just follow us on Facebook, follow us on YouTube, like the video. If you do like this stuff, just hit that like button, because we look at the likes. If you like it, we do more of it. Very straightforward. We look, of course, at how many people watch it. So do share with friends and family that you think could find this useful. Okay, can I elaborate more on the Fed rate cut versus the crypto market? What does it mean for us? Okay, so what does this mean? So since I started to watch the market, I started to watch the market in 2005, and even already then, people were saying that the Federal Reserve is too late, okay? And that's what I have seen across the whole spectrum, because the Federal Reserve has two mandates. They need to make sure that the maximum people are employed, okay? So they don't, if the unemployment rate is too high, they're gonna cut rates. And they also wanna make sure inflation is kept within limits, within bounds, okay? They don't wanna see inflation, much higher than 2%. So what happens is, because they have these sometimes conflicting targets, is that they will be too late. So when inflation was very high, as you might remember, just after COVID, and that happened because of the stimulus checks that were given to people in the US and other parts of the world, like in the UK, for example, restaurants were closed, but people were still getting paid. And obviously all this money meant that they could pay their mortgages and pay their rents, but they also spend this on stuff online. That's why, for example, well, everybody spends stuff online, right? Because you couldn't go out to the shop. That's why it was so difficult to, prices were really high and difficult to get stuff. I mean, at one point in England, you couldn't even get hold of toilet paper. So you get the idea, right? So the problem there is that caused inflation to go up. So what could have the central bank have done at that point? Well, they could have raised interest rates. They could have told the government, hey, don't spend too much money. And they did raise interest rates, but they did it too late. Okay, so inflation was already out of control. But now, because inflation rate has been really high and people paid much higher mortgages and it was much more expensive to borrow, that, as we know, it killed crypto, right? So crypto had not its most recent bull market, the other bull market. It killed that bull market, okay? And it slowed down the economy. And now, as we know, they're getting ready to cut. So it's a fine balance there. Can they cut to make it cheaper for people to borrow and invest again, and maintain the labor market as it is? Or is it too late? Have interest rates been too high for too long? Now, my experience is that they've been too high for too long. We don't see it here, okay? But but if you look at the data, when the unemployment rate moves, even if it's a small move, I think the unemployment rate is at 4.2% in the US. Even if you have that small move, normally when you have that small move, it's an indication that things are not looking too good. Okay, so the main scenario now is that we're going to have a soft landing, so slightly higher unemployment rate, maybe 5.5%, maybe 6%. But it's not going to crash the economy. We're not going to have a 10% unemployment rate. If this happens, it might cause crypto to go up a bit. But the problem is when you start to read that the labor market is bad, when you start to read that the unemployment, that the people are losing their jobs, like if you run a business and you see that 100,000 jobs were lost, then you're gonna be like, okay, everybody's losing their jobs, so I'm not gonna go and hire too many people. In fact, I might need to fire some people myself. So it creates a vicious circle. Something that we see in crypto all the time, right? When crypto prices going up a lot, people want to buy lots of crypto. When prices coming down, people don't want to buy. What am I doing with crypto in general? So if there are some smaller altcoins that we can of course trade and buy that have like a bullish momentum, that are stuck in rectangle patterns that are about to break to the upside, there are some of these coins. Like you can look it up, stuff like Super, for example, had a nice breakout just a couple of days ago. So there is some stuff, but there's not too much of it just yet. So one can buy selected stuff in crypto because the charts look okay and because they're going to cut rates. But realistically, if we have a recession, crypto prices will either trade sideways or they're going to trade lower. That's my opinion. But again, I'm looking at the charts. If there's a very interesting pattern, I will go long. Okay, it looks like that was all for today. Thank you so much for joining me. If you have any questions, as always, just drop them in the comment section. We will be back next week, same time. So that will be at 9:30 London time. Thanks so much for watching, and I see you guys very soon.